Welcome to this episode of the Say Hello to Joe podcast, brought to you by Century Ford and Century Chrysler Dodge Jeep Ram of Mount Airy, Maryland. I'm glad to be with you here this morning. It's hard to believe it is almost the end of January. We have a snowstorm lingering in the background for this afternoon, and I'm flying solo today. And the reason I'm doing that is I want to talk to you. I get asked a question a lot by friends and customers. And, buying a car is a great experience. Paying for a car is a horrible experience because, you have to pay for it. So I get asked a lot about our options of how to pay for a vehicle here at the dealership. And I wanted to spend a few minutes and go over those with you. We have our Ford dealership and our Chrysler Dodge Jeep Ram dealership. Ford's captive financing arm is Ford Motor Credit. The Chrysler dealership's captive finance arm is Chrysler Capital. And those are important to know because all of these TV commercials that you see with, 0% for 72 months plus cash back, all of those advertisements you see are driven by the captive finance makers. So people come in a lot and say, man, I want to take advantage of that 0% for 72 months. And we say, that's great. But if you take that 0% for 72 months, you might forfeit a $4,500 rebate. So you say to yourself, well, what does that mean? So let's say you had an unpaid balance of $50,000 with a 0% financing for 72 months. You could take conventional financing and only finance $44,500 because you get a $4,500 rebate. So we'll show it to you both ways. We'll show you the incentivized rate and take a look at your payment, and then we'll show you a conventional rate, a competitive interest rate with the rebate. And chances are, you'd be surprised, 9 out of 10 times the conventional rate using the rebate to reduce your unpaid balance usually works out to your benefit. So a lot of stores won't show you that, but we make it a point to take the time and to show you that. And the other thing too is that along with our captive finance companies, Ford Motor Credit and Chrysler Capital, we also have a great relationship with about 6 or 7 local banks. And they're big names in our area: TD Bank, Capital One, Wells Fargo, SunTrust, which is now Truist, Wells Fargo, and we can be as competitive as anybody. And the reason we have our relationship with those lenders is from a convenience. Why come to the dealership, pick out a car, do all your paperwork, and then have to run to a bank or a credit union, submit your loan application, and then come back 3 or 4 days to pick your vehicle up. We can do it all right here. We also have an arrangement with a credit union conglomerate where we are signed up with probably 10 of the biggest credit unions around, and we can actually process their financing paperwork right here at the dealership, so you don't have to go to the credit union. So that's just a little bit about paying for the vehicle, and we also do accept cash if you just want to write a check. So just thought I'd throw that one out there. The other question I get a lot is leasing, and a lot of people get confused about leasing, and they say, I don't want to lease a car because I don't own anything. Well, here's a little public service announcement. If you finance a vehicle for 72 months, you don't own it until you make that 72nd payment. So what's that mean? So let's say you finance a car for 72 months and you're rolling along and you make 36 payments. And at the end of 36 months, you get that itch and you say, man, I want to buy a new vehicle. So you come into the dealership, you select a new vehicle, we appraise your car that you still owe 36 months on, we get a payoff, and a lot of times the payoff might be more than what you owe on it. And you say, son of a gun, if you owe $18,000 on a vehicle that's worth $15,000, you have to make up that $3,000 in negative equity. So where leasing kind of puts an insulation around you, I try to explain leasing to somebody like a football field. So you lease a vehicle for 36 months. you get the ball on the, the kickoff comes at the 0-yard line, and your 3 months, you get to the 50-yard line, and it's halftime. So for simplicity's sakes, let's say you lease something for 36 months, and at the end of the three-year term, you have a lease end value. And for simplicity's sake, let's say that's 50% of the value of the car when it's new. So if that vehicle was a $40,000 vehicle, so basically at 50%, you would pay $20,000 over the first 3 years, and then at the end of the 3 years, you have 3 options. You can turn that vehicle in and get something else. You can exercise your purchase option, which would be your additional $20,000, the second half value of that vehicle, or you can trade that vehicle in, and if there's any equity in it, you can use it towards the leasing of a new vehicle. The reason I bring this up is because leasing kind of protects you. It protects you from that negative equity of a purchase on a 6 or 7 year contract, because if you owe more money on the vehicle than what it's worth, and that little mystery is saying, well, if I lease a vehicle, I don't own anything. You don't own anything until it's completely paid for. So, in reality, if you like to trade a vehicle every 3 years, leasing is probably a big benefit to you because it protects you from being negative equity. So why engage yourself in a 6 or 7 year financial obligation if you know you're going to trade your vehicle every 36 months? It's also good for young families whose needs might change. In 3 years, they might need a bigger vehicle, so you lease something for 3 years. It's also good in this market that we're in right now. I mean, we're in a crazy market right now where supply is low and demand is high. So leasing is a good alternative just to get you through, this cycle. So that's my spin on paying for vehicles. Hopefully you found it informative. Again, thanks for viewing this Say Hello to Joe podcast, and like us on all the major podcasts. Leave us a review, and thanks for joining us.